Hey, Niche Wealth fam! If you're a freelancer who's ever had a fantastic $5,000 month followed by a stressful $500 month, this video will change how you handle money forever. You know the unique thrill and stress of irregular income. But what if I told you that unpredictability doesn't have to mean financial chaos? In the next 6 minutes, I'll share 7 game-changing financial habits for freelancers that will help you master your unpredictable earnings and finally achieve lasting financial stability. Being your own boss offers incredible freedom, but the freelance money struggle is real. You have no regular paycheck, no automatic deductions for taxes or retirement, and clients can be late or even ghost you. Here's the brutal reality. 73% of freelancers have experienced late payments, and the average freelancer faces income fluctuations of 40% month to month. This irregular cash flow makes traditional budgeting feel impossible. Most financial advice assumes a consistent paycheck, but as freelancers, we need a completely different approach to overcome the feast or famine cycle. The key isn't to make your income regular, it's to make your financial systems predictable and robust. The first and most transformative habit is creating what I call the income smoothing system. This is your personal payroll department. You'll need a separate bank account, your income smoothing account, where all your freelance payments initially land. Step 1. Find your baseline. Look at your last 6 to 12 months of income. Remove any huge one-time outliers. What's your realistic average monthly take-home? Let's say it's $3,000. This is your baseline. Round down for safety. Step 2. Pay yourself a consistent salary. Decide to pay yourself a fixed amount, perhaps slightly below your baseline, e.g. $2,500 a month if your baseline is $3,000. Transfer this set salary from your smoothing account to your personal spending account every month. This is a form of profit-first budgeting tailored for freelancers. Step 3. Build the buffer. When you have a high-income month, the excess cash stays in your income smoothing account, building a buffer. In a slow month, you still pay yourself from this buffer. This habit stops emotional spending and creates predictable income for your daily life, no matter your client payments. The key is treating your good months like loans to your future self. Next, after your income hits the smoothing account, your second habit is to automate your savings and tax contributions immediately. This is the pay yourself first rule on steroids customized for irregular income management. For taxes, a critical area for freelance finance, set aside 25 to 35% of every payment into a separate, dedicated tax savings account. This isn't your money, it's the government. For personal savings, aim for at least 10 to 20% of every payment to go into a long-term savings or investment account. Use automatic transfers that trigger a day or two after your payroll hits your personal account. This eliminates the temptation to spend it and ensures you're building wealth consistently. No more last-minute tax panic or missed savings goals. This profit-first tax strategy is crucial for long-term financial stability for freelancers. Traditional, rigid monthly budgets often fail for freelancers because income isn't predictable, leading to frustration. Instead, adopt an adaptive budget, which can be a flexible zero-based budget or a percentage-based budget. This means every dollar you expect to receive from your smoothing account salary is assigned a job before the month begins. List your fixed expenses, rent, subscriptions, then estimate your variable expenses, groceries, entertainment. With a percentage-based approach, you might aim for a flexible version of the 50-30-20 rule: 50% for needs, 30% for wants, and 20% for savings or debt. Because your income varies, your budget should too, but your habits stay the same. The flexibility comes in reviewing this weekly or bi-weekly, adjusting variable categories as needed. Use apps like You Need a Budget, YNAB, or simple spreadsheets to track. This gives you control over your spending without feeling restricted by unpredictable income. It's the ultimate freelancer budgeting strategy. If an emergency fund is crucial for salaried employees, it's absolutely non-negotiable for freelancers. Your emergency fund for freelancers needs to be more robust than the typical 3 to 6 months. Why? Because your emergency could simply be a client project getting delayed or a sudden drop in demand. A truly unique approach for freelancers is Claude's Freelancer Emergency Fund formula. Instead of just months of expenses, you calculate your lowest earning quarter in the past 2 years. That's your income floor. Your emergency fund should cover the gap between your income floor and your monthly expenses multiplied by 6 months. This method provides a more realistic and achievable target for irregular income, helping you build financial stability much faster. Aim for 6 to 12 months of living expenses in a separate, easily accessible high-yield savings account. This isn't for investments, it's purely for peace of mind. Build it consistently using small, automated transfers. This fund is your safety net, allowing you to weather dry spells, unexpected bills, or even take time off for professional development without financial panic. You don't need to be an accountant to manage your money well, but you do need clarity. Habit 5 is about consistent tracking and scheduling quarterly money dates with yourself. Track every dollar. Use simple tools like Wave Accounting, QuickBooks Self-Employed, or even Google Sheets to track all your income and expenses. This helps you identify patterns, see which clients are most profitable, and provides real data for when tax season hits. This is also key for income forecasting, helping you predict your earning patterns. Quarterly money dates. Monthly budgets can feel too frequent with irregular income, but quarterly reviews are perfect. Every 3 months, set a dedicated time to review your average monthly income using new data, your smoothing account balance, your emergency fund progress, and your tax saving status. Adjust forecasts, rebalance your buckets, and set financial goals for the next quarter. Treat these money dates as seriously as client meetings. Your financial health depends on it. Finally, for ultimate financial stability, diversify your income streams and master your billing system. Don't rely on a single client or type of work. Explore multiple projects, side hustles, or even passive income streams like digital products, affiliate marketing, or retainer clients. These additional streams help fill the gaps when client work slows down. Also, implement a consistent billing system. Send invoices on time, follow up politely, and automate reminders using tools like FreshBooks or Bonsai. The faster you get paid, the smoother your cash flow becomes, reducing your stress and boosting your overall earnings. It's about building a robust financial ecosystem around your freelance work. Mastering irregular income as a freelancer isn't about wishing for a regular paycheck. It's about building strong financial habits for freelancers that bring predictability to your personal finances. Implement that income smoothing system, automate your savings and taxes, create an adaptive budget, build a robust freelancer emergency fund, track consistently with quarterly money dates, and diversify your income while billing smarter. Start small, build momentum, and watch as your financial stability transforms into true financial freedom. You can take control of your freelance journey and turn financial stress into calm confidence. If you found these freelance finance tips helpful, smash that like button. Don't forget to subscribe to Niche Wealth for more uncommon personal finance insights designed to help you grow smarter, not harder. Comment below, which of these habits will you implement first? I read every comment and they often inspire future videos.